For years, there's been rumor, innuendo, and manipulation in silver and gold markets. As for silver, there's actually been some evidence of manipulation, or at least attempted manipulation. Our next guest was actually the silver whistleblower back when he came to my office at the old financial regulatory job at the Commodity Futures Trading Commission. Andrew Maguire, the CEO of Global Gold Star. Andrew joins us from the UK. Andrew, welcome back.
Bart, it's great to be with you. And I want to say thank you for, you are the only commissioner to publicly draw attention to position concentration. And really, this was the key focus to halt market manipulation. And let me just say, you were the only commissioner to ever answer public emails. Appreciated. Thank you very much.
Well, that's nice of you to say, Andrew. I wish we could have done better back then, but it turns out that some of the news that I want to talk with you about now involves that very same sort of stuff. So over the years, there's been this, innuendo about J.P. Morgan gaining these massive positions. And some of that actually goes back, Andrew, to when Bear Stearns collapsed in earlier, I guess it's spring of 2008. All of those positions were transferred over to, because J.P. Morgan bought them. They actually took some of the traders over with them. And it created this position that was so large that JP actually had to get a waiver from my old agency, and they were given a time certain. I got to be careful what I say. I don't know what I can say and what I can't, but I know they were given a time certain at which they could get out of those positions. They didn't do it quickly enough. But there's a former J.P. Morgan trader who has now pled guilty to exactly that, to manipulating markets. What do you make of it, Andrew?
Okay, I mean, as you say, we've got so little time here, but yes, the Bear Stearns J.P. Morgan story, that is exactly when silver, that was again in that March to June period, we saw silver suddenly plummet from $21 to $8.50. Very, very strange situation. I think somebody was getting bailed out there. Yes, this John Edmonds from J.P. Morgan, he's just turned state's evidence, and we had very similar admissions from HSBC, some of the other bullion banks, traders. But these admissions only evidence what's going on in the weeds, Bart. And as we know, spoofing, subpennying, quote stuffing, layering. I mean, you've seen all this stuff, all a range of traders' tactics. But really, these are mechanisms to illegally move a gold or silver price for a short-term profit, or to a level where maybe a momentum ignition can be triggered. But the test for market manipulation is far stricter. And without direct witness admissions like we're starting to see now, such as we evidenced in the LIBOR scandal, where it was only the Bollinger email manipulation that uncovered that manipulation. And it's really hard to prove unless somebody has a free pass.
Yeah, it is, and that was the problem when we did it. You had to have 4 different criteria. I won't go through them. You and I have talked to them before. It was a really high hurdle to actually prove manipulation, which is one of the reasons that I fought as part of Dodd-Frank to get a less high hurdle on manipulation, which we got, by the way, but you couldn't make it retroactive to that point. So I'm convinced there were a lot of nefarious actors in the markets then, and that they moved some prices around, but we could not find all of these things that were required to prove it. I want to move to gold because you deal with gold all the time. What do you think about gold recently? I know Kinesis, which you're involved is a crypto tied to gold. But how's gold doing, and what do you expect it to do going forward, Andrew, as equity markets seem to be taking a little bit of a dive?
Yeah, well, this is really interesting. There's very little that's been written about this. Now, back in 2017, we had the first discussions, the first outline of Basel III rules coming into effect in March 31st of next year. So we're only talking a few months away. Now, this is undoubtedly going to positively impact the price of gold. And it's the primary reason that as a wholesaler, we see this from the wholesale market size, that the LBMA are forecasting gold prices to rise to $1,532 during 2019. And its member banks are gearing up for it. And we see evidence of this, of the large whales like the Goldmans or the JP Morgans of this world purchasing physical gold for their own book. Now, this is the key thing. And I think this is the thing where Basel III rules change, because really what's happening is it's going to formally, essentially, if we bottom line, it's going to formally remonetize physical gold. Now, we tend to think of gold in many forms, Bart. However, only physical gold will be categorized as a first-tier cash equivalent under these rules. And the bullion banks exposed to the physical market are positioning for these higher gold prices. Now, you can see evidence. I mean, it's like an iceberg. You see 1/10 of that evidence being evidence in the COT report, the bank participation reports, and how options are being priced. But as a wholesaler, we see the likes of the market-making whales and that's the Goldmans and the JP Morgans positioning long both gold and silver for their own books.
Andrew, we didn't talk about this before, so if you want to bail on this question, I apologize for hitting you up with it. But can you tell us a little bit about how Kinesis is doing as a company? And again, if you're not comfortable, no worries.
Oh, absolutely. No, I'm very proud to be sitting as on the advisory board of Kinesis. I see Kinesis as solving a lot of problems. I mean, this is, and I know that Tom, the CEO of Kinesis, has been on your show. This is a revolutionary new monetary system. And what it is designed to overcome is the severe price volatility, which has made cryptocurrencies unappealing to use as a tender for mainstream users. Now, Kinesis provides the ultimate stable coin, and that's a currency which is fully backed by physical gold and silver. Now, it is a game changer, and we've all been waiting for it. And as I say, very, very proud to be associated it. So in a nutshell, Kinesis is one-to-one gold and silver-backed currency that circumvents a broken banking system. And I see Kinesis as not just providing this store of value and the medium of exchange solution, it was going to allow the remonetizing of physical gold and silver. And this actually, the launch of Kinesis in March, April, comes exactly at the time that we see Basel III rules monetizing physical gold coming into the market.
Timing,
so this is a
Andrew.
really interesting time.
Yeah, that's perfect timing. Thank you. We're out of time, but I sure appreciate you spending the time. From the United Kingdom, Andrew Maguire, the CEO of Global Gold Star. Thank you, Andrew. Sure appreciate it.
Thank you, Bart.
And that's it for this time. Thank you for joining. You can catch Boom Bust on youtube.com/BoomBustRT. So long for now. We'll see you next time.